Hi everyone, this is a technical analysis on gold. Let's start with a fundamental overview first. The price action in gold continues to be range bound amid some mixed drivers. The real yields rose recently and that kept the lead on the upside, but there was no signal of inflationary pressures in the economic data and interest rates expectations remained unchanged. There is a compelling narrative emerging since the Trump Biden debate that Trump has basically already won the elections and his policies will be inflationary that would keep real yields higher for longer or even lead to a sizable increase. Although this narrative has some good arguments, it looks premature to price in such developments now, given that the context is different. The market might have moved on it so much mainly because there was nothing else happening. In the next weeks, though, we will get many key economic releases, including the NFP and CPI, so it will be interesting to see how the market will react to these catalysts. Now, on the daily chart, we can see that gold continues to maintain a range-bound price action. From a risk management perspective, the buyers will have a better risk to reward setup around the key 2277 support zone, where we can also find the 38.2% Fibonacci retracement level for confidence. The sellers, on the other hand, will want to see the price breaking below this support to change the bias and increase the bearish bets into the next support around the major trend line, where we can also find the 61.8% Fibonacci retracement level for confidence. On the 4-hour chart, we can see that the price is now trading inside this tight range between the 2320 level and the 2337 resistance. The buyers will want to see the price breaking higher to gain more conviction and position for a rally into the 2387 level next. The sellers, on the other hand, will want to see the price breaking lower to keep targeting a drop into this 2277 support. On the 1-hour chart, we can see more clearly this tight range as we await the key catalyst in the next days. If the price stays below the 2320 level, it will keep the bias more bearish in the short term, while staying above the 2337 level would keep it more bullish. These red lines define the average daily range for today. Today we have the US job openings and Fetcher Powell speaking. Tomorrow we get the US ADP, the US jobless claims, the US ISM services PMI, and the FOMC meeting minutes. Thursday is going to be a US holiday for Independence Day. And finally, on Friday, we conclude the week with the US NFP report.